This brings to mind a personal experience early in my career when I was managing bond portfolios. The problem with picking individual bonds is that you're not diversified enough should any one or a few of these bond issuers go under. And in my case, there was a situation where we owned a lot of GMAC bonds. This is General Motors Acceptance Corporation. This is not the General Motors company itself, but the credit company. This was like in the early 2000s. The company was going through a very tough time, General Motors and the auto industry in general. There was a recession, and we saw the prices of these bonds dwindle significantly. And the question was whether the company, in this case General Motors, whether it was going to go bankrupt or not. Fortunately, the GMAC bonds did not get hit as badly as the General Motors bonds themselves, and we managed to dodge a bullet. Most importantly, I learned a very powerful lesson, which is never to buy individual securities and make concentrated bets like that. This is not something that you fool around with when it comes to retirement money, especially. And so the solution, of course, is to stay away from picking individual securities. I would recommend this to most investors, unless you happen to be a very experienced portfolio manager in a particular sector of the bond market or in the stock market. Diversification is king for individual investors. There is absolutely no excuse, given the fact that there's so many excellent bond funds out there that are available, and they charge like 20 bips or so, and even lower, for a high quality, diversified portfolio, investment grade as well as higher yield securities, hundreds of bond issues in the portfolio, professionally managed by some of the top bond fund managers in the world. So there is no reason to go the route of picking individual investment grade bonds. I would highly recommend viewers not to take that route.